Well, let's quickly move on from spirits to the automotive space. Escorts Kubota reported a pretty good set of numbers for the second quarter. Growth was led by the tractor segment, but construction equipment remained under pressure. To talk about this and more, we have Mr. Bharat Madan, whole-time director and CFO at Escorts Kubota, joining in. Mr. Madan, good to have you in. So let's talk about the performance on the tractor side. Do you get the sense that this is going to be sustained? And what are your projections for the second half?
Well, yes, I think if you look at the demand momentum this year from April till August, before this GST cut was announced, the industry was growing at 10 to 11% sort of rate. And then the last 2 months, we have seen the growth has gone up to 26-27% for the industry. So obviously, this is one of the major impact other than the whole sentiment, which are positive. I think GST cut has a significant impact on the demand side. Whether this will sustain at this level looks difficult. I'm sure the GST rate is going to sustain going forward too. But yes, definitely the momentum for this year has been good. And earlier our guidance for the industry growth for full year was something very mid-single digit. And now we expect it will be a low double-digit sort of growth which industry can experience.
So industry will grow full year at low double digits. And you'll grow better than industry?
We should be in line with the industry.
Okay.
What about the construction segment, sir? What's the outlook there? That business still remains a little under pressure?
Yeah, so that business has been under pressure, but if you look at quarter on quarter, there's been an improvement. I think first quarter, the degrowth was significantly higher, and this quarter, there's been a marginal improvement. The decline is only about 18% compared to, I think, 27-28% decline, which was there in the first quarter. But numbers are obviously under pressure right now because the infra spending has been low and the monsoon was extended this time, so the construction activity was not very picking up in this space. But we expect now from November onward, there should be a pickup happening on the construction equipment side too. So second half normally is better for the industry. So we expect they should be able to make up some of the losses we've seen in the first half.
Any guidance like you gave for the tractor segment here, construction?
We expect if it's a flat year, I think it will be good because that means you are growing almost 20% in the second half.
20% in the second half, okay. Mr. Madan, overall, what are inventory levels like? I mean, after the GST cuts and the brisk sales we've seen in the festive season, where are things now with respect to inventory?
So end of October, since the retail season was very strong and most of the places, at least at a company level, and many stocks were actually stocked out. So at the channel level also, I think it's less than 4 weeks of inventory now, which is lower than the earlier normal average, also about 5 weeks average. So they're also sitting at a very low level of inventory today. Okay.
Just a word on your export markets. I think this quarter there's been a healthy growth there as well. I think about 26%. That's what you've done on exports. So just talk us through second half trends for your export markets. Which ones are looking, really strong to you?
So exports will continue to do better because we are already guided for the full year 25% growth in the export numbers. And I think so far the numbers have been very good in the first half. And we expect the similar momentum will be there in the balance of the year also. And the export has been one of the focus area for us. And we see that as a growing business even in the future years.
Okay. All right, Mr. Madan, we'll leave it on that. Or just a word actually on margins. Didn't track that. And you've done really well. I mean, at a blended margin level, you've seen a fair amount of stability and improvement as well. So what is the overall EBITDA margin trajectory for the full year?
So last quarter EBITDA margin was, I think, about 13.1%, and we expect the margin will remain in this level. So one of the reasons, obviously, the softness which is continuing in the commodity prices. Even the last quarter, we saw some inflationary pressure was there, but I think in the next quarter, we're seeing it will actually be again subdued. So I think on full year basis, we think we should be able to be in this range only 13% around, for the full year.
Okay. All right. Mr. Madan, we'll leave it on that note. Thanks very much for joining in.